How's it going, subscribers? Today we're going to be talking about Netflix, the company in the stock Netflix, NFLX. So I'm sure you guys already know about Netflix and chill. So let's get started and talk about how Netflix is doing as a stock and as a company. So we can see in the short term that Netflix has risen 3%. We look at the 1 week, Netflix is actually down 2.54%. We look at the 1 month, Netflix is down 1.65%. We look at the 3 months, Netflix is
have more than $100 million. Subscribe to my channel so I can teach you how to make millions.
Let me tell you about my day so far. Coffee in Paris, surfed the Maldives, took a little nap on Mount Kilimanjaro. Oh yeah, and I got digits from this Polish chick in Rio. NBA Finals. And all that was before lunch.
I have more than $100 million. Subscribe to my channel so I can teach you how to make millions.
going up about 0.71%, which is not much. We look at the 1 year, Netflix has only gone up by 8.14%. But when you look at the worst day of last year, December 21st, we could see that Netflix was actually down like 25%. Oh, down like 30%. So you can see that the price was 233. So imagine if Netflix goes back to 233. That's a lot of money lost. So we can see the risk in this company, but when we look at the 5-year, we can see there's a sort of an upwards trend. So we can see right here there seemed to be kind of like a bubble, and then the bubble bursted right here, and then we're kind of back into bubble territory. So maybe right now it's a little overvalued, I would say, just by looking at it at a glance. Now when we look at the volume, we could see the volume is at 6 million, but the average volume is 11 million. So the average volume is much higher than what it is right now. We look at the highs, we can see that we're pretty close to our highs. Actually, we're not that close to our highs. The highs, we still got a bit of way to go to the 52-week high. And when it comes to the lows, we're also kind of far away from the lows. So we're kind of in the middle point right now. Netflix is a pretty rich company with 152 billion market cap, high PE ratio of 134, and Netflix doesn't offer no dividends, which sucks. So the sucky thing about Netflix is it offers no dividends. We look at the news, we can see the news. There's not much going on when it comes to Netflix in the short term that will necessarily affect the price in a major way as of right now. Netflix is pretty much the news that has occurred about Netflix is pretty much similar that it's always been. Netflix has always been good at blowing money, and that's pretty much what the news of Netflix has always pretty much been. They haven't fixed that problem of burning through cash. Now when we look at the analysts, we got 44 analyst ratings. 66% are saying it's a buy, 27% are saying it's a hold, 7% are saying it's a sell. We look at the Morningstar, they are saying that international expansion offers attractive markets for adding subscribers. Subscribers, sorry about that. Netflix internal recommendation software and large subscriber base give the company an edge when deciding which content to acquire in future years. Netflix has built a substantial content library that will benefit the firm over the long term. Now, when we look at the haters from Morningstar are saying that the firm continues to burn billions of dollars of cash to create its original content with no end in sight. The level of competition in the US and internationally is increasing and will continue to do so over the near future. Disney will launch its own branded SVOD service in the second half of 2019. The need for increased content and marketing spend outside of the US will limit the rate of margin expansion for the international segment. Now, when we look at the researcher report from Morningstar, what they're saying is that Netflix continues to burn cash with competition looming on the horizon. When the Morningstar rating they're giving it is 1 star, with the economic moat being very narrow, and their fair value, what they're valuing Netflix is at $135. Their uncertainty very high, and the stewardship standard. Now they're saying that it's worth only $135. Now when you look at the 135 is way down here. They're saying it's worth about this much. Are they right? Are they saying all this was a bubble right here? So that's the question. Now another thing to look at about Netflix is the earnings. You can see the earnings is kind of it's the good thing about the earnings is in the positive, and the actual earnings has beat the expected, and it has been doing so for a while. So this is good news. And the other thing about Netflix is that it's a low volatile stock. And the final thing about Netflix is the fact that the CEO Reed Hastings, the company's headquarters is in Los Gatos, California, founded in 1997 and employs 7,100 people. Netflix is an internet subscription service company which provides subscription service streaming movies and television episodes over the internet and sending DVDs by mail. It operates through the following segments: domestic streaming, international streaming, and domestic DVD. The domestic streaming segment derives revenues from monthly membership fees for services consisting solely of streaming content to its members in the United States. The international streaming segment includes fees from members outside the United States. The domestic DVD segment covers revenues from services consisting solely of DVD by mail. The company was founded by Mark Randolph and Wilmot Reed Hastings, Jr. on August 29, 1997, and is headquartered in Los Gatos, California. The FINRA listed name for Netflix is Netflix Inc. common stock. Now, one last thing, guys. One last thing, subscribers, is the fact that they do have a full report on right here. You can see it says read the full report. So if you guys want me to go over that, smash that subscribe button and leave a comment below and let me know that you want me to go over the full report. Hit that like button, and I'll see you guys in my next video. Thank you guys for watching, and thanks for subscribing. Thank you for hitting that like button, and thanks for your comments. See you guys next time, and thanks for sharing. Said, be fearful when others are greedy, and be greedy when others are fearful, by billionaire Warren Buffett. And essentially what this means is when traders are greedy, they'll keep on buying
and driving the price up and thinking that it's going to keep on going up and up and up. But eventually what ends up happening is the stock ends up tumbling back down to earth from the moon because of greed. And people, that's how people lose a lot of money. And when Warren Buffett says be greedy when others are fearful, what he means is that when others are fearful because the stock plummets and everyone starts selling their stocks at a discount, that's the time you want to start buying companies. That's the right time to buy. But usually people start selling. People call it a crash, and that word crash scares people. Really? Let's change the definition. Instead of crash, let's call it a discount. That's essentially what it is. A discount. That's really what it's all about. So as we can see, the Fear and Greed Index by CNN, what emotion is driving the market right now? What emotion? Right now, the greed is driving the market right now. And the reason for that is, as we can see, the McKellen Volume Summarization Index measures advancing and declining volume on the New York Stock Exchange. During the last month, approximately 8.23% more of each day's volume has traded in advancing issues than in declining issues, pushing this indicator forward the upper end of its range for the last 2 years. And as we can see, the stock price strength, that was the breadth. With the stock price strength, the number of stocks hitting 52 weeks highs exceeds the number of hitting lows and is at the upper end of its range, indicating extreme greed. As we can see, that's why the market kept going back up and up. As we can see, it's in the greed territory. As we can look at the safe haven demand, the difference in 20-day stock and bond returns, stock have outperformed bonds by 2.92 percentage points during the last 20 trading days. This is close to the strongest performance of stocks relative to bonds in the past 2 years, and indicates investors and rotating with stocks from the relative safety of bonds. And when we look at the put and call options, the CBOE 5-day average, the put-call ratio during the last 5 trading days, volume and put options has lagged volume in call options by 36.82% as investors make bullish bets in their portfolios. However, this is among the lowest levels of put buying seen during the last 2 years, indicating greed on the part of investors. And when we look at the market volatility, the VIX and its 50-day moving average, the CBOE Volatility Index is at 15.72. This is neutral reading and indicates the market risks appears low. And when we look at the junk bond market, the yield spread between junk bonds versus the investment grades, investors in low quality junk bonds are accepting 1.74 percentage points in additional yield over safer investment grade corporate bonds. This spread is much higher than what has been typical during the last 2 years and indicates that investors are highly risk averse. When we look at the market momentum, the S&P 500 and its 125-day moving average, the S&P 500 is 1.04% below its 125-day moving average. During the last 2 years, the S&P 500 has typically been above this average. So rapidly declines like this indicate extreme levels of fear. So as we can see, the greed index right here, the greed over time, we are hitting the peaks. We're heading towards the peak greed moments. However, that being said, we still have more greed to go. So if you're heavily invested, this might be the time to get prepared for a downfall. As we can see, that way when you have cash at hand during times of extreme greed, extreme fear, you can buy stocks and from good companies at discounts. When we look at VictorVest Stock Advisory says that in the short term, the market is mildly bullish. VictorVest advocates buying safe, undervalued stocks that are rising in price at this time. Second goal is to turn my 100 million into 100 billion. Like this video, leave a comment on the company or stock that you want me to analyze. I go over graphs, charts, news, quotes, forecasting, prices, rating, and reviews. My job is to help you pick the best companies and stocks to invest in so you can become a multi-millionaire. That's multi-millionaire like me. Subscribe so you can become a millionaire and share this video to help your friend become a millionaire too. Don't miss out. Stay on top of your game and ahead of the curve. The world is your oyster. Make hay while the sun is shining. Everyone is subscribing to my channel, so subscribe so you can stay ahead of the curve, so you can come to my show, so you can flow. Comment down below so we both can grow. Like and share this video so everyone can know how to make millions of dough. Subscribe so we both can thrive. Join the millionaire tribe. Watch this video until the end to win the grand prize. It's show. Turn my 100 million into 100 billion. Like this video, leave a comment on the company or stock that you want me to analyze. I go over graphs, charts, news, quotes, forecasting, prices, rating, and reviews. My job is to help you pick the best companies and stocks to invest in so you can become a multi-millionaire. That's multi-millionaire like me. Subscribe so you can become a millionaire and share this video to help your friend become a millionaire too. Don't miss out. Stay on top of your game and ahead of the curve. The world is your oyster. Make
Hey, while the sun is shining. Everyone is subscribing to my channel. So subscribe so you can stay ahead of the curve. So you can come to my show. So you can flow. Comment down below so we both can grow. Like and share this video so everyone can know how to make millions of dough. Subscribe so we both can thrive. Join the millionaire. My link below for a chance to win $1,000 on my Webull account. And if you want a chance to win $25, make sure you download the app using my link in the description below. Subscribe to my channel so I can go over more news, more companies, and more stocks. I'll cover their earnings per share, the charts, the trends, the ratings, the news, the Sortino ratio and Sharpe ratio, market correlation, PE ratio, cash flow, balance, statements, net assets and liabilities, and many more. Just for watching this video, I'm going to give you the chance of winning the grand prize. For your chance to win, subscribe to this channel and comment down below, future millionaire. That's what you want to write in the comments below. Write future millionaire. For every social media website you share this video, it will increase your chance of winning the grand prize. Share this video on Twitter, Instagram, Facebook, Snapchat, to all your social media accounts to increase your chance of winning the grand prize. Congratulations. Don't forget to